Here we go, folks. 510 call. MMT Rick is telling me 1960. We had bids at what price? I think they 1770. So yeah, we'll just kind of leave it there. The cash market is very weak in this 5-minute opening bell print. However, you can see the markdown in the call of 27.63 on the close. To that, there's no volume. And we're going to teach you how to take an illiquid option that doesn't have volume, and we are going to create the emotion in these contracts. And we will make a market within these ranges, and that NASDAQ 100 on just a slightly down 5 handles, that's all, but enough to take out $7, $8 premium. Look at that, look at that, look at that. I got a 1770 bid. A 1770 bid. I don't have a print. Let's see here when that cash market in 3, 6, 9 minutes, we're 6 minutes into the opening bell. And that's the part that I want everyone to know. 1890. I got bids at 1770. I'm 6 minutes open. Look at that, 19, 20, 10 buy at 2763 and a 19 low 2010. Look at that there, 1890. Here it is. It's coming down with the 6.93. This is live here and now. Yeah, we had these opening bids before the opening bell at 1770 bid. I want you to keep one contract there only, Mr. Goalie, just one, just to make a market with this shallow cash pullback and a triple witch. And they closed at 27.63. And we're down here at that wholesale cash market with that bid and ask. Here it is. Here it is. Here, I need to make the low, Goalie. It's 1930 by 2050. Go to 1970. 1970. Let's make the low of the day just on one. 1970. Come up with that. 1970. 20 is below you. Come up that 70. There you go. Go back at 50 cents. Let's go ahead. Let's tighten that up. Let's tighten it up. It's 2030. Look at that bid and ask. All right. Come up with that 50. Come up with that 50. Come up with that 50 bid. There you go. Now it's 1930 by 2040. 20 by, whoa. Go back at 50 cents. Let's try to create one contract from the markdown, even though we'll have to just, someone has to make the market when there's no volume. And that's what we're doing. There it is, 50 by 20. He's going to learn. He's got 20 below him. He's got, contract it. Let's make, nope, they threw you as I thought they would. Yeah, so that's okay. But no, you got to know when to cancel. I was telling you there. Yeah, well, you know what? Once again, milliseconds can, bid and ask can change. There, we created that one low print. That's what we needed to do. Now, what we will do to cancel the 1770, that's our first bid. That's a $10 cash down market. You're down 8.89. You're selling in the index. Do you understand that bids will fall when the selling is in this first 10-minute bar? Do you understand that? You see it right here? Okay, so that's what they're doing. So what you want to do is bid the other contract at 11.7. And limit out of the upper one that we made that low. Let's create another low with the limit out order at 1790 just to make the cash market. There you go. 1620 by 1690. 1950. We want to create that low print so we can get more volume on the entry at that low end of that cash market. That NASDAQ 100 is testing that right now, and everyone's fearful about that grease. So, getting a bounce on the call. You'll limit out one side and limit in at the lower price. That way, we have to use the one contract to make a print so that the rest of the world. See how you are out to sell up here? Are you on the ask? All right. 1770. Go ahead and take it at 1790. You're out there, right? There it is right there. That's that dollar wide bid and ask. Yes, it is. Down to, okay, go 1780. 1780. There you go, 1780, 1780, 1780. Got 18 here, 17. It's 80 pennies wide. And the MMT is going to do what? Always keep a stop market order because that's cash is king. As that volatility is open now 11 minutes. And there's a bid and ask ranges on one contract. We created that 1950. We needed to do that. That's why we only use one contract, though, to do that. And then we'll start creating even lower markets until we can get the right movement in here with that index. And it doesn't matter. The prices will automatically rise in value, and we'll just go over there and say ding, ding, and sell it. And that's how we're going to do it. That's how we manage the bid and ask in a 2510 call live on this opening bell here and now. Okay. And once again, all right, come off of it. You got 1840. You must be bouncing. Yep, you're bouncing. All right, now throw it out there at 18. I'm going to let it go. It's a 1750 by 1860, 1870, 70, 70. I'll tell you what, go ahead and throw it out there at 1890, 1890, 1890. We made that cash market at 1950. It's raising that up. Throw it out there at 1850, 1850, 1850. Now just leave it there. And that's how these markets are made. So if this bounces in value, then this will go higher from that print that we created. We wanted to create all the emotion because this is done here live. So when people do come in and look at the triple witch options expiration, oh, there he went, tootling, and we made another low. So what did we do? We made another low. And so the volume was us. Now let's go ahead and bid that cash market. Let's bid that cash market below that market. Let's bid it. Let's bid it at 1450, 1450 bid, 1450 bid. Yeah, it's a 1770, 1870. Yep, we created that dollar rule on a 1950 on a low and then a secondary low of 1850. Now, let's get this cash bid down there in that wholesale range based on what this cash market is doing. Based on we created that low so they would make it go lower. We're the only volume players now. So what we're going to have to do is we're going to have to do this all over again. Are you ready? All right, I got a bid right here right now. I got a 1670, 1730 last. We created that low of 1950. We created that low of 1850 on the exit only to get it lower. And at least we can do this with you live right here because it's happening now. And this is how you make markets. Now, give me a bid. He's got a pop. He's got a pop. There it is. It's a weak, shallow pop. Give me a bid. You want to create another low. Here's what you're going to have to do. You're going to have to create that low. Just throw it out there right now on a flash at 1650 and create another $2 lower low. He's 70 by 1770, and there's a 60, 70. All right. So no, I never said cancel it. You want to get hit on the bid. So what is your bid? 1650. So 70s are in front and 60s on the ask over here. And he's getting tightened up. That's based on this shallow movement. And we've created the only market here to start the day for day 4 of triple witch indexes, meaning that because we are market makers, we have to come in here and create these prints. And we did. So what? It costs a little money to do business, but then, all right, give me that bid. Give me that bid. You still at 1650? There it is, 1650 on the bid. Keep it there. You want to make that $2 lower cash mark. Keep that 1650 bid. Don't run from that 1650 bid. No, don't run from it, but make them get them to cross that market. Throw that bid. Say, throw it to me now. 16, you're 50 cents. There it is. You created another cash market at 1650 ring in that cash register. And guess what? It's only been the MMTs that are making this market so that the rest of the people in these exchanges can see those prints and then start to make decisions based on the directional movement in the NASDAQ 100. We created that 1650. Throw it out at 1650. Throw it out at 1650. Give me a... Now, let's take that lower cash market down to 1170 bid, but let's go ahead and make another lower cash market. Sell the 1540, create another lower market, put the limit order below the market, and see if we can steal 5 contracts down there. Go ahead. There you go. It's an 80 by 1680. We created the low. So what do you want to do? we create the lows so that they can go lower, right, Rick Goley? So basically you're 1610 by 1720, but listen, we don't want to sell it right in here. The only time that we would want to sell it for is if it goes lower, so we could create the lower print only. That way we could maybe get them to sell it down to our 1170, 1250. I know you're still in it. I'm just saying we created that low. Now you're going to need an exit up on that top side. Go ahead and put that out at $20 and pitty pennies. That's based on the NASDAQ 100. If it wants to bounce, it is at ring a ding 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 15-minute bars over with. Go ahead and put that out at $20.50. Creating that low print in that market. Remember, we haven't gotten anyone off the sideline yet, Rick Goley. So as they raise the electronic bid higher, we hope that this bounces, because then they'll take the bid higher live right now. And once this goes higher over here, we can always zap them and sell it because we're in control. Rick Goley. Throw it out there, Rick Goley, at 1840, 1840 out, 1840, 70 on the ass. Go ahead, cut him. 1920, he's there. Bam! There it is, 1810 by 1940. And we made another print in the market. So we did 5 contracts and they're all us. Now let's go ahead and bid that cash market below that market. Let's line that bid. Line that bid at 1560 on one. Let's line it at 1560 to have a bid lower in the market because we created these prints. And once again, it's a triple witch, but you can see how light the volume is. This is 17-minute opening bell, 1850 by 1960. That low, we created that low for a reason. And then we took profits because he sold at 1840. And we bought 9, and so there's $100 difference there. So what? Then we got hit at 1650, now one contract at 1890, it looks like. So, and then someone else sold one in here at 1840, and that created the print, but that created the low because you're getting small bounces in the NASDAQ 100. So now that we've created the low, we've already owned these prints before, and we can move in at any time. But once again, it's how to trade. See, 1890 was the sell. It's only 1850 by 1960. But we're going to make lower bids. Learn the power of making the market when there is no volume. And not only that, you can set the psychological tone for the day when all the people in these exchanges, CBO, NYS, NAS, PHS, all of these, some are ECN, some are, they're option exchanges, okay? And it's a triple witch. And we're creating a market, and this is done live here and now.